So hi, I'm Shane Waldop, Global Investment Specialist at MandG Investments, and I'm delighted to be joined by Alex Araujo, Fund Manager for the MandG Global Listed Infrastructure Fund and MandG Global Themes Fund. So Alex, thanks for your time today. Great to have you with us. Maybe to start off with, for South African investors who may not be that familiar with you, how did you come to join MandG, and maybe tell us a little bit about yourself?
Sure. Well, thanks for having me. I love coming to South Africa. I'm a funny origin story. I am of Portuguese ancestry, born in Canada, where I grew up mainly, and then I subsequently moved to London, where I've been for the last 22 years, and where I joined MandG about 10 years ago to launch the Global Listed Infrastructure Fund, which we developed and launched in 2017. So that we are about to celebrate our 8th year anniversary, in fact.
Now, there's been quite a growing demand for listed infrastructure. We're seeing that on the client side. But many South African investors may not be that familiar with the asset class. So I guess my question is, how do you define listed infrastructure, and what sets your approach apart from maybe many peers out there in the market?
Sure. Well, I think South Africans have one benefit going for them, which is the appreciation for the importance of infrastructure. I think a lot of markets and economies, especially recently, have taken things for granted. And so what we focus on is critical infrastructure assets, physical assets where a company has the prospect of using the strategic advantage and importance of those assets to generate very long-term cash flow streams, earnings growth, and ultimately dividend growth for our investors. And we invest across a section of infrastructure that's quite broad. The traditional infrastructure areas, which is utility businesses, energy infrastructure businesses, transport infrastructure businesses. Then we also invest in social infrastructure businesses, which includes things like hospitals and schools and municipal and civic infrastructure. And then the really exciting modern infrastructure as well, which is digital infrastructure assets and transactional and logistics type infrastructures. So running the breadth of the kinds of assets that we've come to depend upon as a society in our respective economies globally from morning to evening in our day-to-day lives.
Now, you mentioned those three broad categories that the fund typically invests across, which is economic, social, and evolving infrastructure. Maybe can you just walk us through how investing across those three broad categories helps from a portfolio diversification perspective?
Sure. Well, the constituent members of each of those categories of infrastructure tend to move differently from one another in different market environments. And so there will be episodes in the market where perhaps economic infrastructure is doing well, social less well because it tends to be a bit more defensive, and evolving very well. And in cases like that, we will often see ourselves rotating capital around within our existing holdings, not just by category, but also by underlying sector to take advantage of relative opportunities. And what it also means is that it brings the volatility and the drawdown below what we would typically expect in an equity product, so that capital preservation becomes an important feature.
And from what I can see, one of the key features of the MandG Global Listed Infrastructure Fund is dividend growth as well as inflation protection. So I guess my question is, how do you go about trying to find these companies that have these characteristics? And also, how successful has the fund been in trying to deliver this objective since it's been running?
Yeah, I mean, it's art and science. It's finding assets and the companies that manage them with the capability and the objective to grow the earnings and the dividend streams from those businesses. We have an objective within the strategy to grow the income to the unit holders every year in base currency terms, which I imagine for a lot of investors here would be US dollars. And we do that by way of the dividend growth that we receive from the company. So we need the dividend growth in order to pay out that growing distribution stream. And so about finding the assets, companies with pricing power, good marketing positions, and being able to take advantage not just of economic activity, but also inflation to be able to pass through higher prices. And so since inception, we're very proud to have delivered an income growth to our unit holders well above the rate of inflation. It's about 5% compound per year against inflation of about 3% in the G7. Now, of course, inflation differs across countries and regions, but we use the G7 economies as a benchmark effectively for our income growth and inflation protection objective.
Now, for South African investors who are looking to diversify their offshore exposure, maybe looking to add some listed infrastructure to their portfolio, why might now be a good time to maybe consider adding something like listed infrastructure?
Yeah, well, I touched on the capital preservation and low volatility characteristics of the strategy. And in a market that's very excited about a handful of stocks and some admittedly quite revolutionary developments in society, in computing, in economies, it's in a sense an offset or a hedge. In a sense, it's a portfolio allocation for many of our clients to protect against difficult periods in the market while delivering that income and that inflation protection quite consistency. So what we've typically found is that the strategy protects capital in difficult market environments, such as what we've seen earlier this year, for example, around April when markets took a real dip, and also longer periods, such as in 2022, when the market had a very difficult year and the strategy was able to protect the downside. It's a diversifier. It is a global fund. It's spread across many, many countries globally in terms of domicile and currency and asset exposures. So there is a diversification element more broadly at the sector and regional level as well versus a typical portfolio.
So Alex, one of the most compelling aspects of the strategy is its alignment with long-term structural themes. So could you maybe walk through some of those themes that you see playing out in today's market?
Sure. What we're finding increasingly is that at the center of some of the most challenging aspects of the world we're experiencing today, as well as the opportunities, sits infrastructure. Whether it's energy security, whether it's the energy transition, the digital revolution, demographic needs, urbanization. Infrastructure in so many ways is sitting at the center, whether it's a solution or an opportunity. So that could be data centers when it comes to digital revolution. Could be grid infrastructure and electricity generation, particularly sustainable electricity generation to power all of this. And then in the meantime, as we urbanize, we need more and more transportation infrastructure or better infrastructure. And so these speak to all the aspects of the strategy and many of the opportunity drivers for the underlying companies and their assets themselves.
Well, thanks very much, Alex, for your time today and for sharing your insights about both listed infrastructure and how you go about building your portfolio. I'm sure the listeners and viewers will find it really, really helpful as they navigate today's complex and evolving market environments.
Indeed. Thank you very much, Shane.